The tax rebate has failed to stimulate the economy. Let's have a look. Good morning everyone, Florian Heise here and welcome to another episode of Heise Says. I've got my morning stein of coffee and a viewer shared this article with me that I thought would be a great way to start the day. The ATO's tax rebate fails to stimulate the economy as Aussies use it to pay off debt, a report says. I'd also say a lot of Aussies actually used it to buy things before they got it, before they put their tax return in. What do you reckon? I would be shocked. Honestly, I think it's part of the reason why JB Hi-Fi had a little uptick at the end of the year. Let me know what you think in the comments, guys. So, the tax rebate of about $1,000, hoped to be an economic stimulus, isn't traveling far or doing much stimulating. Well, yeah. Am I the only one surprised about this? It is being used by debt-laden households to take advantage of low interest rates and pay off IOUs and reduce home mortgages, a bank survey found. Well, that is really a fantastic sign. If the majority of people are doing that, and you'd have to think this is only, because it's a tax rebate, it's only going to help people that, are earning enough money to get the rebate, and you'd hope they'd be sensible with it. They're not just going to, I'll just spend a bit more on a credit card, although some obviously have. And some households are still unable to survive on wages and investments every month without going further into debt. Well, yeah, that's the state of how things are. The Me Bank's Household Financial Comfort Report released today found families are more worried than 6 months ago about job security, income, and meeting living expenses. Well, yes, the last time we had a look at consumer price index, inflation has gone up for petrol. The cost of petrol has gone up 10%. And while maybe, international holidays, or I think interstate holidays, one of those that you're definitely buying every other day has gone down, it doesn't offset the fact that your petrol's going to cost more than that. You put $8 more and you're filling up your tank. You're going to notice that, and you're going to get a bit worried. It found 35% of those surveyed wanted more work than they could currently get, and around a quarter of those in jobs felt insecure. 35%. 35%. That aligns a lot with the Roy Morgan Unemployment Index, and I did a video about that, they were looking at the rate of 9.2%, and you've got to realize the ABS has a particular way of measuring it. If you do 1 hour of work within the survey period, you're considered employed. Now, I don't know about you guys, but 1 hour of work isn't enough, even when you're earning professional wages. If you do an Uber 1 hour a week, does that count as being employed? I'm not sure. Could someone who knows let me leave a comment? Because 1 hour a week on Uber, sometimes you're probably earning nothing, depending if you have a good day or not. So, there we go. I think this 35% of people who want more work, I think that's much more accurate. That's much more accurate. I might have jumped down there. Okay. So more households want to increase cash savings as a precaution against a financial emergency. But that is beyond the reach of some 10% of families who already spend more than their income each month. That's worrying. I mean, that's if you're at that point, people need to just really, really cut, like when it gets tough. I remember last year when we had it really tough, when business was slowing down and we still had a whole lot of costs that I hadn't been able to get rid of. I told Rachel, no spending, nothing for a couple of weeks, not even $1. We'll just eat all the food we have and just save. You've got to take some drastic action if you're hitting to that point. You've got to cut things. And you'd be surprised how many of these little expenses just add up. The Netflix here, the other thing here, all these monthly things. I've gotten to the point now where I hate subscriptions. I just hate them. I'd rather buy things outright and not subscribe to it, because that's how it works. Speaking of that, why don't you subscribe to my Patreon? Link in the description. Anyway, the survey of 1,500 adds to warnings from the Reserve Bank that the nation's economy is not reaching goals on GDP growth, employment and wage increases. And it adds to pressure on Prime Minister Scott Morrison to spend more tax revenue to stimulate economic activity, either if that put the promise of a budget surplus, even if that put the promise of a budget surplus at risk. Yes, well, we'll see. However, the report indicated some households might have been more financially uncomfortable had Labor won the May 18th election. Oh, I'm pretty sure of that. The 16th BQ annual survey reported households were gloomy about their present financial situation and their future. Despite lower mortgage loan rates, expected cuts in personal income tax, and higher local and global equity prices, I mean, okay, sure, like that's going to make a difference to your day-to-day. This is largely a consequence of continued decrease in the value of residential property in many parts of Australia, said consulting economist for Me Bank, Jeff Orton. That's interesting. I mean, how many people... I know Australia's got we've got a very high percentage of people who own shares, but how much of that is in CommBank or Telstra when that went public and people are just holding on to those? Does the equity... does the increase in equity have the same wealth effect as increase in house value? That would be something interesting to look into. Comfort with wealth would have fallen much more if it wasn't for record bond prices and rebounding share markets, as well as the government's retention of negative gearing on investment properties and cash refund for franking credits that saw households' comfort with investments increase. The Me Household Financial Comfort Report is based on a survey of 1,500 households with project assistance from DBM consultants, economics and beyond. So there we go, 1,500 households, and they're not doing particularly well. I can't say I'm too surprised that this isn't helping to stimulate the economy, because, well, we saw yesterday that the JB Hi-Fi is going up. We saw consumer confidence. I mean, if we look at it here, I'll just overlay this. The last time we looked at it, it was going down. And we have today, we're going to receive from the National Australia Bank their business confidence survey. So I'll bring that up. We'll just switch over to that. We'll have a look here. I mean, the NAB Business Confidence Index in Australia fell from 2 to, in June 2019, from 7. So this was the last time it was released, and it's coming out today at 11 o'clock, and it'll be interesting to see where this is sitting, if consumer confidence is going down, if business confidence is going down, if GDP growth predictions are also heading down, and that's from our own Governor of the Reserve Bank. This all has a bit of a feeling of Reaganomics to me, where they're hoping that this will stimulate the economy. But anyone who is smart is seeing what is happening, or anyone who follows the news, the rapid rate cuts, the interest rate cuts, and we'll have a look at that here in Australia. I'll bring that up again. We'll look at money, interest rates. I mean, you can see here the fact that we had such a rapid succession of rate cuts, and we're going back. It was one, and then a pause, then another. One, then a pause, then another. I would argue that the rapidness of the decline of the cuts, because I mean, look how long. I just switched from 5 years to 10 years here to actually get some more. I mean, the last time was 2011 when we had a double. In 2012, they cut it again. And that was just after shooting it up. But the fact that they've done such a bold move to do in quick succession such cuts, psychologically that has an effect on day-to-day on people. We've got, your cost of living is going up, your petrol is going up. So no wonder people are going to use this, oh great, we've got another $1,000, boom, off the credit card. Fantastic. Oh, boom, we'll pay ahead on the mortgage now. That $1,000 at low interest, that's going to make a dent in our capital over the long term. It may even be enough to reduce their minimum repayments. Chucking $1,000 off there, a couple bucks, and it all adds up. So, I mean, what do you think, guys? In some ways, I think this is a good sign. This is encouraging. If most people are actually using it to pay down debt, that's smart on their behalf. That fills me with more confidence in some of the other stuff I've been reading. But it doesn't really... well, maybe people are wising up to just not spend. It would have been more encouraging if people were investing in silver, perhaps with their $1,000 rebate. I know a few people did in the comments. They bought in gold or silver. I mean, that's a good way to protect yourself from falls in the Australian dollar. Not financial advice, by the way. You know, spend it what you're going to. Anyway, guys, thanks for joining me for this episode. I'd love to know what you think about all this in the comments, and I will see you all again later today. Take care.